Welcome to The Deep Dive, your shortcut to being well-informed. Today, we're taking a deep dive into Euronet Worldwide's second quarter 2025 earnings call.
Yeah, EEFT.
Exactly. And this past quarter presented, well, a really fascinating blend of strategic moves, some undeniably robust operational performance. And yet some headline numbers that got a very specific market reaction.
Right, a bit of a mixed signal there.
So our mission today is really to unpack that divergence for you, to understand why the market seemed to, well, shrug, despite what looks like a strong underlying transformation happening.
Yeah, and Euronet is such a significant player, isn't it, in the global payments landscape, constantly evolving.
Always.
And this call, I think, gives us some crucial intelligence on their ongoing transformation, the strategic direction they're charting, especially with this dynamic macro environment we're in.
Absolutely. Understanding those nuances is key, particularly when you see that, immediate, almost skeptical market reaction. So let's get right into the headline numbers from Euronet's Q2 2025. You'll note that revenue came in at $1,074.3 million.
Okay.
Now, that was a slight miss against consensus expectations, which were roughly $1,080 million. But importantly, it still represented a solid 9% increase year over year.
Right, or 6% in constant currency, which kind of strips out those FX fluctuations, gives you the core performance.
Exactly. And adjusted EPS followed a similar kind of trend, hitting $2.56. That missed the consensus of about $2.66 by, well, around 10 cents.
So a slight miss on top and bottom line against expectations.
Yeah.
But, while those figures caught attention for being a bit shy, the underlying operational strength, when you actually dig into it, was pretty clear.
Okay, tell us about that.
Well, operating income surged an impressive 18% year over year. That's 13% constant currency, hitting $158.6 million.
Wow, okay.
And adjusted EBITDA, it followed suit, grew 16% year over year. That's 11% constant currency to $206.2 million.
Right.
But maybe the most telling sign, for me anyway, of that operational efficiency was that consolidated operating margins expanded by a healthy 112 basis points.
So over a full percentage point.
Yeah, 1.12 percentage points. And that really indicates real leverage in their business model, even with that slight top-line miss,
And that's precisely where the puzzle begins, wouldn't you say? Because the initial market sentiment, if we look right after the announcement, was one of, well, caution, despite the impressive operational leverage and the margin expansion you just highlighted.
Yeah.
Those slight misses on revenue and adjusted EPS seem to weigh really heavily.
That's a crucial observation. It really highlights that common tension you see with earnings reports, right?
Definitely.
The immediate focus, it often overshadows the longer-term vision. We definitely saw shares pull back in the days following the announcement.
Yeah, they did.
Suggesting investors were, scrutinizing the nuances rather than immediately cheering the operational wins. It's almost a classic case of the market focusing on what was missed against the estimate.
Right. Even when there's strong underlying performance and, frankly, some big strategic moves brewing.
So the headlines paint this picture of caution, almost a shrug from the market. But as, any seasoned observer knows, the real story rarely lives just on the surface.
Not at all.
Let's peel back those layers and really explore the strategic heartbeat beneath Euronet's Q2 performance, because this call truly highlighted some pivotal strategic advancements and strong segment-level execution. It paints a much richer picture.
Couldn't agree more. The devil, as they say, is in the details. And in this case, the details show some pretty compelling strategic momentum that maybe, just maybe, the broader market hasn't fully appreciated yet.
Okay, so let's start with the money transfer segment. They really delivered some exceptional results this quarter.
They did.
Revenue hit $457.9 million. That's up a strong 9% year over year. And their operating income, it soared. An incredible 39% year over year to $65.6 million.
39%. Yeah. Which led to a significant 296 basis point operating margin expansion for just that segment. This isn't just growth. This feels like resilient growth.
And what's fascinating here, I think, is that this robust performance came despite some noted macro uncertainties, evolving immigration dynamics. And there was that new 1% remittance tax that came into play.
Right. How did they address that?
Well, management clarified that this tax, it only affects about 27% of their money transfer revenue. It, translates to just 12% of Euronet's consolidated revenue.
Okay, so it's smaller than you might think.
Exactly. They expect a minimal overall impact, maybe 0.2% on consolidated revenue. It really tells us that Euronet's digital push and their diversified network are effectively insulating them against some very real macro headwinds.
That's a key point.
And importantly, they even saw an uptick in both digital and retail growth in July compared to June. So that indicates continued momentum despite those challenges. It kind of validates their strategy, turning potential challenges into opportunities.
And their digital transformation efforts are clearly paying off within money transfer itself. Digital transactions were a huge driver, up 29% to 5.8 million.
Wow.
And digital payout products now make up 55% of their total volume. That grew 20% year over year.
That's a big shift.
It is. Overall, total transaction volume increased 4%, and the actual principal transferred grew 10%. And beyond just the numbers, they've made some strategic inroads in the APAC region.
Oh, yeah?
They acquired a majority position in Kyoto Remittance in Japan,
Okay.
which gives them access to a pretty rare Type 1 funds transfer service provider license. That's crucial for handling high-value inbound bank deposits through their Dandelion network.
Right. Dandelion, that's their own global real-time payments infrastructure.
Exactly. Plus, partnerships with big names like Google and the European neobank Nickel are significantly expanding their digital reach and capabilities. Lots happening there.
Definitely sounds like it. Okay, shifting over to EFT processing.
The ETM side.
Yeah, the ATM side primarily. Revenue there grew 11% year over year to $338.5 million.
Yeah.
And their installed ATM count increased 5% to 57,326.
Still growing the network.
Still growing. Now, management did note that while Q2 growth might seem to decelerate slightly, it was actually compared to an exceptionally strong Q2 last year.
Ah, the dreaded tough comp.
Exactly, the tough comp situation. It means they're comparing against an unusually high benchmark from last year. Rather than signaling some kind of structural slowdown in the business, they fully anticipate a return to robust growth in Q3.
That makes sense. And for you, our travel-savvy listener, here's a noteworthy detail. Americans traveling to Europe, often using cards with the wrong currency, leading to those sometimes higher fees.
The dynamic currency conversion.
That traffic was up 10% over last year, which directly benefits Euronet's ATM business.
Right.
It's a little ironic, isn't it, that a common travel headache for consumers actually translates into a tangible tailwind for their business.
It is, yeah.
They're also seeing strong growth in merchant acquiring. They signed over 9,000 new merchants this quarter, including a major integration with Oracle's OPI, their operational payment interface.
Okay.
Specifically targeting the premium hospitality sector, so hotels and the like.
Interesting diversification there, too. And then in the ePay segment that handles digital content and payments revenue, increased 7% year over year to $280.1 million. But operating income was up an even more impressive 19%.
Nice leverage there, too.
Yeah. And the digital shift here is particularly pronounced. Get this, 70% of transactions are now entirely digital.
70%.
Yeah. And key wins included content distribution with Riot Games in Turkey, bringing Etsy gift cards onto their platform. Previously, you could only get those direct from Etsy.
Oh, interesting.
And securing an agreement to launch Amazon Prime subscription services in India. These wins really highlight their ability to diversify their digital offerings for major global brands, moving way beyond just simple mobile top-ups.
Okay, so we've seen strong performance generally in the individual segments, but now let's talk about the really bold, transformative moves that set Euronet's long-term trajectory. From your perspective, what makes the CoreCard acquisition such a pivotal moment for them?
Yeah, that's where the strategic picture really snaps into focus, I think. The stock-for-stock acquisition of CoreCard, valued at about $248 million.
Yeah.
It isn't just adding a new service line.
No.
It's Euronet planting a flag firmly in the notoriously complex, high-margin, and highly defensible credit issuing market.
Right, issuing not just processing payments.
Exactly. This is a potential game changer. It positions them to capture a substantial, roughly $10 billion addressable market with potential operating margins. Management hinted could be nearing 50%.
Wow.
Revolving credit processing is it's a complex domain. There are very few skilled providers, which creates a deep moat for established players like CoreCard. And they have a proven track record, right? Serving major brands like Apple, Goldman Sachs, Amex, plus fintech innovators. It demonstrates their tech is robust and scalable.
And management did directly address those concerns about Goldman maybe selling its Apple Card portfolio, didn't they?
They did. They stated that possibility was anticipated. It was factored into their purchase decision. They emphasized that CoreCard's value extends well beyond any single program.
Right.
And even if the Apple Card portfolio were divested, Apple would still serve as a strong marquee reference customer for years, just because of the platform's sophistication and the sheer complexity involved in migrating such an advanced system.
Yeah, you can't just flip a switch on something like that. It's a smart way to kind of de-risk that acquisition narrative.
Absolutely. And this quarter also saw another really significant breakthrough for Euronet's RN platform.
RN, their modern processing platform.
That's the one. They signed an agreement with a top 3 U.S. bank to power thousands of their ATMs.
Okay, that's huge.
It's a truly significant win. It acts as a powerful domestic reference customer in the U.S., and it underscores confidence in RN's capabilities for acquiring, issuing, processing real-time payments, the whole stack.
It's a massive validation for their modern cloud-native architecture.
Huge validation. And other Remittance successes this quarter included deals with Santander in Poland, Security Bank and Maybank in the Philippines, and Access Bank in India. It shows impressive global momentum and versatility for the platform.
So Euronet is clearly outlining this deliberate shift away from the legacy cash-based businesses. And this is a long-term strategic pivot they've been executing for some time now.
Yeah, it's not sudden.
No. For example, Euronet-owned ATMs, which were 25% of revenue back in 2019, were down to 19% in 2024, and they have a bold target of just 7% by 2034.
Wow.
That's a significant reshaping of their revenue mix over the next decade.
And CoreCard is seen as a key accelerator in this very transformation. It really acts as a springboard into that high-growth U.S. credit issuing market.
Great.
And offers significant global expansion opportunities, too, especially in emerging markets where credit penetration is still developing.
Makes sense.
And like we touched on, revolving credit processing is just notoriously complex, very high-margin, few-scaled providers, making CoreCard a truly strategic asset for Euronet's digital evolution. It's all about securing future revenue streams that are both digitally native and inherently more profitable.
And despite those quarterly misses on the headline numbers we started with, Euronet reiterated its full year 2025 adjusted EPS growth target of 12-16%.
Right. Which shows a lot of confidence, doesn't it?
It really does. Confidence in their strategic direction and the belief that these big moves are going to pay off.
It does. And it implies that management expects that operational strength and these strategic wins to more than offset some of the near-term pressures. Now, we also noted some specific financial details that impacted EPS by about 10 cents total this quarter.
Okay, what were those?
There was roughly a 5 cents per share impact from higher interest expense that was due to refinancing some convertible notes.
Okay.
And another 5 cents from higher income taxes. They flagged a 1-2% increase in the effective tax rate expected for the rest of the year.
Got it.
They also executed share repurchases totaling $247 million. That's a move that slightly benefits EPS, but primarily demonstrates their capital allocation strategy, returning value to shareholders.
Okay, so putting it all together, what does this all mean for you, the investor, looking at the broader picture here? Let's try and connect these insights to the wider market perspective and how it might interpret these events.
Well, what we definitely observed was a clear market divergence.
Right.
Despite management's really strong conviction in strategic wins like CoreCard and that big U.S. bank RN deal.
Yeah, they sounded bullish.
Very. But the market's immediate reaction was, well, one of skepticism. After an initial slight pre-market uptick, Euronet's shares closed down nearly 2% the day of the announcement and over 3% the following day, resulting in about a 4.7% decline in the few days after the report.
And that really is the central question here, isn't it? It appears the market prioritized those slight top line and EPS misses, maybe potential expense levels.
Right.
While management was clearly emphasizing the long-term structural gains and that strategic pivot towards higher margin digital businesses. Why do you think that disconnect is so stark?
Well, it's worth noting Euronet's trailing one-year return before this report, it was around Negagit's 8.3%.
Ouch.
Yeah, which significantly underperformed the S&P 500's, plus 21.6%, and the payments ETF, IPI, which was up about 20% over the same period.
So there was already pressure.
Exactly. It signals an existing undercurrent of investor skepticism before this report. That probably made the market more sensitive to any perceived near-term weaknesses. They were already kind of under pressure, so any miss, however slight, got amplified.
Looking ahead then, what are the key catalysts you'll be watching for? Things that could potentially shift this narrative for Euronet?
Okay, a few things come to mind. First, the successful completion of the CoreCard acquisition. That still needs regulatory and shareholder approvals.
Right, closing the deal.
Exactly. Then we'll be watching closely for updates on the initial deployment and scaling of the RN platform with that top 3 U.S. bank. That's a huge proof point they need to deliver on.
Absolutely.
The performance of cross-border remittance through the crucial Q3 holiday corridors will also be important. And getting clarity on how they plan to use the proceeds from that $850 million convertible notes offering they did.
Okay.
And then, more broadly, macro factors like potential September rate cut expectations. That could influence investor appetite for fintech and payment stocks overall, including Euronet.
And beyond the immediate horizon, anything further out?
Yeah, looking further out, management also touched on the early stages of exploring artificial intelligence.
Yeah.
Yeah, AI for customer experience and operational efficiencies,
Interesting.
as well as stablecoin integration, leveraging their RNN platform's existing architecture for blockchain-native transactions. Now, it's way too early to quantify the impact of those, but they are certainly potential future growth avenues. Could add significant value down the line. It does showcase Euronet's trying to be forward-thinking.
Okay. As always, please remember, this next segment is purely for entertainment and educational purposes only. It is absolutely not financial advice. Investing involves risk, and you should always do your own research.
Right, standard disclaimer applies. But given the market's seemingly maybe myopic focus on the slight misses,
Yeah.
potentially overlooking these significant strategic moves and the reaffirmed guidance. One, let's say, provocative interpretation for a longer-term investor is that Euronet's aggressive pivot into high-margin digital services, like credit issuing with CoreCard,
Wait.
global payments with RN. It might be significantly undervalued right now.
So the market missing the forest for the trees?
Possibly. Could be a classic case of that, creating a potential opportunity for those willing to look beyond the immediate headlines. So bearing that in mind, our outrageous but plausible trade idea could be a contrarian long position on Euronet, EFT.
Okay. Contrarian long, what's the rationale?
The rationale is basically that the market appears to be significantly discounting Euronet's transformation. CoreCard, for instance, opens up that huge $10 billion TAM in revolving credit, a highly complex, profitable segment where only a few scaled players exist.
Right.
The RN deal with the top 3 U.S. bank is a powerful validation, a domestic beachhead for their modern platform, and management reiterating that 12-16% full-year 25 adjusted EPS growth. That signals real conviction in these long-term drivers, which the market maybe isn't giving them credit for yet.
So the outrageous part is betting against that immediate negative reaction.
Exactly. Betting against a negative reaction with high conviction, assuming there'll be the delayed appreciation for this digital evolution and strategic positioning. Now, you could potentially hedge this.
How so?
Well, maybe simultaneously short more traditional payment processor, or maybe an ATM operator that lacks Euronet's diversified digital strategy or their global footprint, or that aggressive push into high-margin software. That would hedge against a broad sector downturn while trying to isolate Euronet's specific transformational potential or alpha.
Interesting. So anticipating their strategic moves lead to outperformance against less adaptable peers.
That's the idea.
Yeah.
As its revenue mix shifts and those higher margins hopefully materialize. Again, just an idea, not advice.
Understood. And that wraps up our deep dive into Euronet Worldwide's Q2 2025 earnings. What we've seen is, well, a really compelling narrative, I think. A company making bold strategic moves towards a higher margin, digitally focused future, even as the immediate financial headlines presented a more mixed picture.
Yeah, and the core question for you, the listener, really remains. Is the market overlooking the long-term value creation from Euronet's pivot towards sophisticated software, credit issuing, digital money transfer?
Right.
Or are these near-term misses actually a sign of underlying challenges that might persist?
Right.
It's that story of transformation versus immediate performance. And how you weigh those factors will really shape your view on this one.
Thanks for tuning in to the deep dive. Remember, this entire discussion is for informational purposes only. It is not financial advice. We absolutely encourage you to continue your own research and analysis. Until next time.